Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Sean Udall on of the Tech Stock Strategist. Sean, dark couple days here. How you holding up?
I'm holding up great. I'm, I've now got about 3/4 to maybe even 85% of my buy list is prime buy categories right now, or prime buy prices. The trick though is not firing the spare capital too quickly, because we just don't really know how kind of crazy this can get to the downside. So, I do have some downside levels I'm sort of thinking about, and whatever you guys want to talk about, fire away. But the two things I'll say is, as of yesterday, we finally did put in some sort of meaningful broad market correction. The generals kind of got shot. I'm not sure if I talked about FANG the last time we were on that show, but I've written a couple of reports on how stupid that people are chasing FANG is. That's Facebook, Amazon, Netflix, and Google.
Right.
There's only one of those four stocks I like, which is Google. Three of them I thought were just absolutely ridiculous for the last 2 to 3 weeks. So some shorts are working, but it's hard to say. I mean, you could have a flush today, and then you kind of get the margin clerk Monday effect, and everybody keeps looking for kind of a big bounce. I think the thing that people aren't looking for is just what actually is going on out there from an economic standpoint. And the data is just not nearly as bad as sort of the stock market would have you believe. The other thing I saw this morning, then you guys fire away, but Henry Blodgett came on CNBC this morning. And I think he likes to use the Case-Shiller PE, which is the CAPE. And I'll just say that is the absolute worst valuation metric that you can possibly use in the market. And Blodgett also probably isn't one to be kind of talking about how overvalued markets are, because in 99 and 2000 he was the guy promoting the most outrageously valued tech stocks on the planet. So here we are, 15 years later. And, he's trying to be the purveyor of, value investing. It just, I just be careful kind of what you listen to right now, because I think there's a lot of really poor.
Did he get run out of Morgan Stanley or Dean Witter? Didn't he get run out of there?
Well, he can't work in the securities industry anymore, from what I know. But I'm pretty sure he can't. Whatever happened, all the stuff that happened. I think kind of he fell into kind of that Jack Grubman category of analysts that did enough bad things that they literally can't work on Wall Street anymore.
Levels for us. Levels for here in the Spider or the S&P futures that you're looking at if the flush continues. Yayo wants to see if you have any levels in the Spider, or what's your main instrument did you look at to determine?
I look at the NASDAQ more. So here are the two numbers. So even yesterday, a bunch of people were pinging me, as you can imagine. And, a lot of people said, hey, maybe 49 even, 49.30. I'm like, no, I don't see the NASDAQ holding until maybe 48, 45. So that's one level. I think people were thinking the 200-day might hold yesterday. And I kind of said, nah, we're gonna go through the 200-day like butter. So 48, 45 might hold. If that doesn't hold, I think you can just kind of knock this thing down in anywhere from 75 to 100-point increments. I would be pretty surprised, I think, if we go much below 46, 46.50. Here's some stats. NASDAQ's down 7% now. It's going to be down another 1 or 2% probably in the first half an hour today. So we'll put in an 8 to a 9% NASDAQ correction probably within 15 to 30 minutes of the market open. As of yesterday, the stocks index was down 21%. So now some of that's deserved. I mean, I was very negative, as you remember, on Skyworks, Avago, Qorvo, and NXPI. But stocks down 21%. I'm trying to think. The last two big stocks corrections, I think, were about 18 to 19%. And I think then you'd have to go back to 2012 and 2011 to get anything over 20. And 2011, I mean, we had, that was the whole debt debacle. And I think the stocks at the most was down 23 or 24% that year. Maybe it was a little more than that. But, I mean, here's the weird thing. The averages just have not reflected the stealth bear market that we've been in for the better part of 3 or 4 months. And, the average stock in the Russell 2000 Well, as of 3 days ago, before the market meltdown, the average stock in the Russell was down 25%. So as of yesterday, the average stock in the Russell is probably down 30 to 32% because there wasn't much that was beta yesterday that wasn't down 5 to 10%. So hey, we're having a flush. We're getting extreme. It's really hard to time the exact bottom, but I bought a couple things yesterday, and I'll probably buy a couple more things today. I'll probably buy a couple more things Monday, Tuesday. But I'm not feeling that, I haven't seen what I call the early turn. I haven't seen the price slip that sticks. So it's just a matter of kind of having your list ready to go and being ready. And then, by the way, I had Netflix short from 126. I thought it was brilliant covering that, 114, 115-ish yesterday. I mean, literally, I leave that trade on a few hours longer. I get another 10 points out of it. So, this market right now just kind of makes everybody look like fools, and that's what it does from time to time.
Why did you, what was your trigger in Netflix? How did you play it? And you talked about covering it, but what was your trigger there?
It pinged off of that 125, 126 level a couple times. And I had a fundamental trigger, first of all, but really the trading trigger was it just couldn't seem to hold the highs. And in fact, every day it would go up and sort of test the high or maybe set a new high. It wouldn't hold the high, and it would close lower. It would trade more weekly at some point. So, and I don't know, maybe I kind of had a feeling. I mean, the two stocks I thought would hold up a little better haven't held up very well, but they've held up better than, a lot of other stuff in the market recently. But yeah, I mean, it was just a feeling. In fact, I really probably should have put more. So the other short, I wanted to put Facebook on. I also wanted to put on Palo Alto Networks. As you know, I've had that short before, and I just kind of screwed up. I only put like 1 or 2 shorts on. I should have put 4 or 5 on. But again, right now, that's what this market is doing. It's kind of making all of us look like fools because even if we make a few good decisions, we kind of get swamped with a bunch of stuff that hits us from other angles. At least that's what's happening to me. I mean, if you hold anything overnight, you just look like an idiot day after day after day. But I mean, I hold stuff for years. So there are going to be times where I take pain in the market and then I have to trade around the pain.
So you're not shaken from, we're still in the major bull market and new highs around the corner. There's nothing to shake you from your thesis on that?
Well, no. Well, I don't know if they're around the corner, but in fact, I actually see evidence. So, in fact, I'll probably put a note up in the next day or two. I actually see the NASDAQ to somewhere between 58 and 6,200. So that's my next NASDAQ target. I think the S&P can go up easily another, especially from here, or especially if we kind of get 1980, 1960, something like that. I wouldn't be shocked to see the NASDAQ put on. I'm basically looking for 10% in the NAS. So the S&P and the NAS will probably end up doing about the same thing. And again, this is kind of my thesis of maybe we finally needed to kill the highest beta, highest momentum stocks so money can finally rotate, because this hasn't been a healthy market for 3 to 6 months, as we talked about a few times. So the only way the market can go higher, you can't just have Facebook and Amazon and Netflix going up and everything else sucking. So, you need to get stocks that actually have value and good balance sheets. And, you need to see hundreds of stocks going up instead of 5. So, I think the hundreds of stocks are going to go up are going to be more of sort of qualitative value type stocks or growth at a reasonable price stocks.
Yeah, you were trying to come up with a new term. Remember, we were talking about that instead of FANG. You were trying to come up with a what was it?
My version of FANG was actually FAMP. So actually, I was replacing Google with Palo Alto Networks. That would be a much, and those 4 stocks have done way worse than, I think Google's relatively cheap and is probably going to hold up pretty well. So, but no, GARP is just growth at a reasonable price investing. That term's been around for a long, long time. And I think, if the market broadens and if we go up again, I think that's the stuff that will emerge. That's the Micron that's beaten the tar. That's the Apples. I bought a little SanDisk yesterday. I'll probably buy more if it goes to 48 or lower. I mean, SanDisk, here's just a great example. And again, using logic right now is foolhardy because it won't work until it starts working again. But hey, I'm still going to think logically, even if the market's, you have to trade almost illogically to make money right now. But SanDisk is trading at 3 times net cash. So if you just sort of think about that, a company of that size and a company of that, you generally don't get huge companies that trade at 2.5 to 3 times net cash. The last one, in fact, I can think of was Apple in 2013. I think got as low as about 2.6 to 2.7 times net cash. So you almost never see a large cap technology company trade at 2 to 3 times net cash, aside from like at the bottom of a market crash or something like that.
All right, Sean, we got to get into some individual issues here, and
fire away.
We're gonna start with Twitter. What are you thinking about Twitter now? Are you still holding your core position, trying to buy more? Or you think you're cutting loose?
No, I mean, in fact, so what was the story yesterday? That Twitter broke the IPO price. Well, Twitter actually was holding up pretty well until the Nasdaq went down 300 points in 4 days. So now, unfortunately, weak stuff is selling off, strong stuff is selling off. There's sort of nowhere to hide. But Twitter had a couple of interesting pieces of news come out. Their product cadence is increasing. They're not that far away from Project Lightning. But what they did yesterday is they actually did kind of a major upgrade to their Twitter publisher network. So again, on a day like yesterday, a piece of news like that won't matter, right? But over time, I think that will matter. But I have not bought any. I don't think in fact, I haven't bought any since whatever the Friday where it hit $27. I was buying that close very aggressively, and lo and behold, within a day or two, I had a 10% gain on that trade. I might buy the close today. We'll see. I'm not quite feeling the mojo that I felt when I was buying it at 27. So that really was my last buy. I haven't bought any since. I'm kind of trying to buy stuff that I haven't bought for a while. Like things like GoPro, I was selling much higher. In fact, close to $60. I'm thinking about buying some of that. Qorvo, a name I was short, and the high was $88. At 50 or below, I mean that's $38 off the high. That starts getting me interested.
What's the symbol on that one?
Go ahead.
No, what's the symbol on Qorvo or Qorvo?
QRVO. And Skyworks, same thing. I was bearish on Skyworks 20, 30 points higher. Now every 2 to 4 points lower on Skyworks, I could get interested, certainly for a trade. I'm not sure I'll hold that long term like I used to years ago, but you give me Skyworks 77 to $78. I'm probably going to put some on for a trade because it can rapidly bounce to 84 in fact, I just sold it the other day, I think at 88, because I think I bought some at 86, caught a little trade on it. And here we are to the pre-market's $80 right now. So if that goes to 77, 78, I might get interested. But I mean, you know what, Joel? I mean, the name almost doesn't matter right now because it's when, where do we flush? What low do we hit? Then how do we turn? And, when we turn, you just have to be ready to fire some buys. But we're almost getting so beaten up and so low and so many names have taken so much damage. I'm not sure the names really matter that much, at least on the first bounce, right? Then once things kind of go up, let's say the Nasdaq recovers partially, then you have to be sort of more discerning. But yeah, we're probably going to enter a point where it's almost we've had a free fire zone for the shorts. At some point wherever we bottom, we're probably going to get a free fire zone for the longs. The other thing I'd mention too is some of the sentiment gauges that we all look at from time to time are very, very distressed again. And in fact, interestingly enough, even though the correction right now isn't as steep as it was last October, some of the sentiment numbers are actually lower than they were last October. So we'll see. I don't know. Maybe we just have to officially print that 10% correction on that. One of the indices. The Dow might be the closest to do it, or the Nasdaq. But we'll see what happens. I mean, if we bounce today though, and we actually close higher, I'm going to be very surprised. So color me bearish for today and probably Monday. And I'm hunting and gathering and trying to figure out where this thing's going to settle out.
Okay, what about Apple here? I mean, broke the 200-day moving average. I just noticed a little relative strength in it. The fact that it didn't get that back down to that 109 area. I believe we had a low of 109.63. What do you think? As if you're going to buy the bounce, is Apple perhaps the go-to stock?
It is for some, but the problem. So Apple might bounce. I mean, we're in the neighborhood now. There's certain names that might bounce 10 or 15 or 20%. A big bounce in Apple is going to be 4 to 6%, right? But interesting. Same thing. I mean, my last buy in Apple was right around 112, and I clipped it. I think I got about 5 or 6 points on that trade. And so I don't know. I might do it, but I think what you said is perfect. Actually, I mean, Apple feels terrible, but really, Apple kind of pre-sold the correction, right? And ever since the Nasdaq started getting really nasty, Apple hasn't really dropped. I mean, yesterday it was down, 2 points. I mean, relative to hundreds of technology companies. Apple actually was down less than most of them. I mean, the average sort of mid cap to large cap tech stock yesterday was down like 4 to 8%. So, and I kind of suspect if today's really, really bloody, Apple probably goes down less than a lot of other stuff. Here's the one thing I do think is happening too. I think Apple is probably now out there with their stock buyback program. So that might support the shares a little bit more. But, here again, too, what's been the story? Okay, so the Chinese stock market is going down, therefore nobody in China is going to buy iPhones to the degree they were before. Now, it's very interesting that story is coming out right now because Apple really doesn't have a defense against slowing iPhone sales. But the reason iPhone sales are slowing is everybody's now waiting for the next version of the iPhone. So if you want to attack Apple about slowing iPhone sales, here's your 1 month period to do it, or 2 month period. Because now this is the natural lull in iPhone sales pretty much globally because everybody's going to wait to see what the next iPhone looks like. And plus,
any update in Ring, RNG, Ring Central?
I haven't, that hit 1850 to 20. So that I don't have it anymore. If I had it, in fact, I'd be selling it and swap into other names that have taken a big hit. So, I mean, frankly, it's been a stalwart. It's pretty close to the 52-week high right now. It wasn't down too much yesterday. It was down, percentage-wise, it was down, it's a lower price stock. But, it's actually held up really well. I'm basically a no position or a hold on it. I wouldn't be a buyer here, but and if I had it, I probably would be a seller because I'd swap it into something else. But it's not a level I would attack. If it takes a shock drop and drops 2 or 3 points, I might be interested in it again. But yeah, actually here there's probably quite a few names I like better than Ring right now.
Okay, we've been on the line with Sean Udall, the tech stock strategist, showing some faith here in the market after yesterday's big sell-off. Sean, great talking to you as always. Have a great day. We'll speak to you again soon.
You guys hope you had a great week. Have a great weekend.
Okay.